Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening as we're here now on Tuesday, the 6th of June, 2023, 5:45 p.m. Central Time. All right, interesting markets now. They've gotten quiet. We're through with hearing about Apple and the cutting edge that it's got. You saw in Ukraine, unfortunately, a major dam. And of course, the Russians want us to believe that the Ukrainians blew it up on themselves. Tonight's update, I'm showing what the IEA thinks about what the impact is from Saudi Arabia cutting the 1 million barrels and when it will start feeling the pressure. Because in the end, while the market has sunk back, the odds still favor that extra 1 million barrels a day will do a lot. The question is, they didn't say how long they're going to put that out there. In other words, how long they're going to keep cutting it. To all my subscribers this morning in my written update, I included a report, a link actually, from a great Bloomberg article today that went into great detail proving that Russia is not cut its oil production. It's almost physically impossible for that to have occurred with the amount of seaborne exports that they're doing via how much they're pumping, where it's going, how it's going with their, it's pretty hard to believe. It doesn't matter to me. I didn't think they were cutting anyways. I've said that. When you're at war, you do what you've got to do. And the Saudis, the last thing they want is a price war with Russia over this. What are they going to do? Say, you got to do this as their coffers need the money to fight with Ukraine? Stop the war is what the Saudis should say. But you know how that works. All right. So as for the rest, tomorrow we have a big auction from the Treasury. It's the first big step since the debt ceiling, and we ran out of cash for all purposes in the coffers, and they're putting it back. I don't have the exact number. It's like 1.3 billion. Yeah, 130 billion. I take that back. Didn't sound right to me. About 130 billion dollars that they're putting out in the bonds and notes. It's primarily notes because they're I'm going from memory, 4, 8, and 17-week instruments. These are all short-term, not long-term. It gets money back into the coffers. What kind of rate are they going to have to pay? Where does the money come from? Very important. You know, the Fed's not buying this, so it's going to either come from money market funds, non-banks, or bank deposits in some manner. I don't think the big banks are buying any of this, and the reason is they're waiting for the other shoe to drop, and I'm talking the big banks where they're going to have to put up a lot more money as reserves. And I think the last thing they want on their books right now is something that got to hold too long. Although I don't think 4 weeks is too long under any circumstance for a big bank. So I didn't quite agree with all the analysts that were saying the big banks won't be there. If they want to show up for 4 weeks, I don't think they'd get hurt. All right. So when you take a look at what the S&P has done, it's the never-ending bull market. Where's the recession that we keep hearing about? That is the words that I want to know. This reminds me so much of everything. It does remind me the same scheme. Where's the cut by the Fed or the pivot? They haven't done either, so don't get me wrong. It goes many ways. But we keep hearing how this recession's going to hurt everything. I haven't seen it come into play. It's summer. People are working. You go outdoors, it is booming all across the United States as the weather is absolutely gorgeous in most areas. I know Chicago's one of the prettiest summers at this point, early summer, that I've ever seen. Late springs or early summers, this is getting itself on right here. You've got a pattern of higher lows, higher highs. One of these times, what will happen is you'll see the market suddenly drop below the prior day's low after it takes out the prior day's high. Now, in this case, just to make it up for you, 42.94.75 is the high today, Tuesday. You haven't taken that out yet. So while it looks like it, you always got to check it. If you just fell, it'd just be a correction. But if you get up over it and then you reverse, it could begin the pattern where you peak out and start getting into the corrective mode. I didn't say it has to happen. I said it could. Why? Well, number one, you could afford to go back to the 18-day average and still not take out a prior break low. Number two, you're running at the upper Bollinger Band. So as you hit it and you got over it for 2 days, I said you'd immediately pull back in, and you did just that. But that's all that you've done. The market is still a very strong market. It has not shown that it has to stay over that number to keep going higher, and that's very powerful. Plus, The reason I question him saying, are we going to get that? You're just getting your first numbers where the markets are trying to stay over 80. You can't count Wednesday, so you got to go to Tuesday. Both numbers over 80. The day before, you don't have that. So all you're at is the second attempt of a day. That's all it is, to be over 80. It takes 3 to embed, and you'd have to get through tomorrow to do that. This is what an embedded reading looks like. And so far, those that are buying the breaks in the market are being rewarded with the market coming up. I know this morning that break number was 45.13. There's a way to enter on my enhanced Bollinger Band course. That was the number, just in case you're interested. And I told traders if they're going to do it, cross your fingers. If you buy it, it got to 45.05. And from there, we're back up right now, some 60 points or so over that. Doesn't mean that you're out of the woods. Can you get up to these numbers, the Bollinger Band? And there is a window envelope. Window envelope's a bit lower than that number. That's my target right now. As we look at the Dow, it's been in an uptrend, higher lows, higher highs, but you've hit your target. So the market is caught temporarily between the upper Bollinger Band, where 95% of the time you won't get over and stay over that number, and pulling back to the resistance line, which is now temporary support since you got over it, of the 100-day average. If that gives ground, you fall back over here. But nothing on this chart is going to take you into a bear category unless you get under 32,729. When we get to the Russell, it climbed, and it's one moment over the Bollinger Band, next under, but it did clear for the first time both the 200 and the 100-day average. That's important stuff. So this market looks pretty good there. In the T-bond market, we have a pattern of higher lows, higher highs, and this is the first attempt. And folks, it is just, 5:50 in the evening now, just its first attempt to get over the 18-day average. But close over that is a friendly sign. You could open the door up for a challenge up here if you don't get back under the 126.25 area. Everything's looking friendly on that chart. Not the case as you go into the curve yield, the 5-year, which is what the Fed will influence closer, and then the 2-year and the 30 days and so on by their actions. You have higher lows, higher high, a heck of a lot of resistance at the 18-day average and the 100, and you're under the 18. So the bias is down, the swing line trend is up, and you have an oversold market. Nothing easy there. In the dollar index, is the market going to be able to fall back and challenge the 18-day average? That's what I am looking for. If you clear the highs of Monday, that would be a sign that this market might want to make a run to the upper band in the 200 week, which I think would take a lot of traders by surprise, a real lot. I don't think people thought the dollar was going to get bullish again like this. It came from the 100 level, and it was a market that the question at the beginning of the year was, it going to get down towards 97? It has certainly confused people. And if it's confused to the upside, well, then you break the euro. Now in the euro, if you saw today, again, Ms. Lagarde was talking about the European Union, the ECB is going to ride this wave and keep fighting inflation until it's resolved. Their inflation numbers are now sticky. I don't know if you saw the Reserve Bank of Australia out of nowhere. No, but not one analyst I saw thought they were going to raise interest rates. Bingo, 25 basis points, it's sticky. Now, we have Canada coming up in a short while. And now the analysts are starting to say they might have to go too. Why? The stickiness of the inflation. The early and low-hanging fruit that you could grab early on is what I wanted to say. And that would come down off the COVID. Did. And, we got down and we lost half of that. But it's the core inflation. And that's where all this stickiness is. And it certainly doesn't help that you see the Saudis trying to prop up energy, because that makes up a lot of people's core CPI. It's a big number. We don't count it in our core. That's a volatile number, so we keep that and food away from it. But shelter, big numbers. Okay. Higher high, higher low. Look at how you just keep fighting in the pound. Now, they too are getting ready to make a decision on monetary moves. Flat there. The market has trouble staying over the 18-day average. I love currency trading. These charts are hard. They're not easy right now. In the micro Bitcoin, look at all the news they're throwing at the market. Coinbase today has the government after him. Binance, and boy, did you see Mr. Gessler today? He is coming down on these numbers, Binance, like a rock. I mean, I can imagine the fine is going to be monstrous when this all plays out, if he wins his case. I don't see how he doesn't. And he told every investment advisor, I watched the interview, if you have money there, you are breaking the covenant between you and your client, and they can come after you for that. Go look at the interview. CNBC had it. Go look at it and you see if you come to the same conclusion I do. I know what he said, and I certainly would be careful if I were managing somebody's money, and me as the person managing it, it's at one of those firms. He's making it very clear not to do that. Brent versus WTI oil, you're staying over the 18-day average. Okay, so you give up a little, but as long as that's it, the Brent will be the stronger of the two. And here is the Brent, and you went from the lower Bollinger Band to the upper, back to center line, no trend, confusing, real confusing. Same in WTI. Don't try to be a hero with this because you're not getting follow through up or downside. As I said yesterday, gasoline's going to try to fight a battle here between the 200-day, the 100, and the 18, as it starts eventually now getting ready for the July 4th holiday. It's only a month away. So another driving spree, but you can almost see the action. It's lower, it's higher. The market's narrowing into a point here and something will give. In the nat gas, this, in my opinion, will come alive big time when we get a hot spree in the United States. Until then, you have to assume you're not using as much gas as you're producing, and all the different reports that come out Thursdays are when they come out, typically probably on the bear side. So you put it together, you try to come up with game plans, but you also have to know when to trade small if you're going to trade. And that's what I've been telling my accounts and my subscribers. I've been saying, hey guys, this is the time where I think you trade small, not big. And when there's the opportunity, you go back to big. I don't think this is it. These are all the different offers that we have for you. Pick and choose. You hit select and away you go. It's you can get to this by moving your cursor to the top of the page, or there's an icon that'll take you to our free section for all this. You can go to iraepstein.com, free offers. You can call my staff. They'll work with you at 866-973-2077, but there's a heck of a lot. Chart of the day, the QT price counts. Get it. If I were to tell you to pick up and try to get something, get it. Take a look. You won't see this at other firms. And look at what it does. We send you an explanation. Our brokers have everything for you. It's pretty cool. You will see what it does. It's not an entry point. It's a where might a market go. What are the probabilities, stage 1, 2, and 3? It shows it to you and what breaks that probability. So that's where you're at. Here's the cursor. Give it a click, and I'll see you tomorrow morning.